My name is Innocent Mapanda. Thank you for tuning in to your favorite channel. In today's lesson, you are going to focus on June 2023, Paper 1, Advanced Level Accounting, Zimsec. The first question reads, which of the following is a characteristic of management accounting? Number 1, management accounts are prepared mostly for external use. This is wrong. Management accounting is prepared to benefit the management, which is internal use only. We move on to part B. Management accounts are prepared in accordance to international accounting standards. This is wrong. When preparing management accounts, we are not forced to comply with international accounting standards. Why? Because the information being prepared is for internal use only and not meant to be publicized. We move on to part C. Management accounts provide information for decision making. This is very correct. Then part D, management accounts are prepared for publication. This is wrong. Like what I told you earlier on, management accounting is not for external use, but for internal use. So there's no need for publication of the accounts. So the answer is C. I hope you are following. We move on to part 2. Prudence concept is about part A, disclosure of an item in the financial statements. This is wrong. Losses being provided for as soon as they are recognized. This is correct. Revenue being accounted for in the period in which it arises. This is wrong. Part C is in line with matching concept, where revenue is recorded, expenses, income are recorded in the accounting period and or incurred. Then part D, revenue being anticipated before it has been realized. This is a violation of realization concept. So the answer is B. So for prudence concept, you need to understand that income and assets must not be overstated. Losses and liabilities must be provided for as soon as they are recognized. B is the correct answer. We move on to part 3. It reads, accountants prefer the commercial reality of a transaction rather than its legal aspect. Which accounting concept is being applied? Your answer is substance over form. According to substance over form, we say if a transaction, right, is recorded in the financial statements or accompanying disclosures of a company, it must reflect their economic substance rather than their legal form. So by economic substance, we are talking of the commercial reality of a transaction. So D is the answer. Substance over form, it works for hire purchase, it works for leasing. When you encounter a question whereby you are being asked that hire purchase and leasing is under which concept, you say substance over form. Matching concept is wrong. Why? Because according to matching concept or accrual concept, we say income and expenses must be recorded in the financial accounting period incurred or earned. Materiality is a concept which says that if we buy items of less significant value, such as ashtray, staplers, or a bin, those items must not be treated as non-current assets. Why? Because they are of less value. So we treat them as revenue expenditure. Then we have dealt with the prudence concept in part 2. So the correct answer is D. We move on to question number 4. It reads, on 1 January 2017, a business had an allowance for provision for doubtful debts of $800. At 31 December 2017, its trade receivables were valued at 19,800. Trade receivables at 31 December 2017, referring to this 19,800, includes debts totaling 1,700, which are irrecoverable. If you see the word irrecoverable, it means bad debts. So bad debts must be written off from trade receivables before you multiply with this 5%. Here comes the question. The provision for doubtful debts account will be, right? So I'm going to prepare the provision for doubtful debts account. It has a balance BD on the credit side. And the balance BD, it refers to the provision as at 1 January 2017. We are talking of $800. So I'm going to write 800 on balance BD. I hope you are following class. We proceed. Right. Trade receivables includes 1.7 of bad debts. So it means I'm going to calculate balance CD by subtracting 1.7 from 19.8. Then you multiply this figure with 5%. So 19.8 minus 1.7, you get 18.1. Then multiply 18.1 with 5%. You get 905, which is going to represent your balance CD. Then you put the totals. You can notice that the debit side is bigger than the credit. So in the totals, I'm going to put 905. What is 905 minus 800? You get 105. And this 105 is representing the income statement or the profit and loss account. So in simple terms, we are saying the answer is A. Our answer is A. Why? Because the provision for doubtful debts account will be credited with 105. And this is the 105, which is on the credit side of the account. I hope you are following. But this question may come as the income statement account will be. If it comes like income statement account will be, your answer will be C. Why? Because if income statement appears on the credit side of the provision for doubtful debts, it reflects increase in provision for doubtful debts. So increase in provision for doubtful debts denotes expenses. Therefore, income statement will be debited by 105. I hope you are following. So you need to be very careful. This question is not asking the income statement. It is asking provision for doubtful debts. And in the provision for doubtful debts, you can clearly notice that 105 is on the credit side. So your answer is A. The balance of trade receivables on 1 January was 17,080 DR. The following transactions were made during the month of January. What is the balance on the sales ledger control account at 31 January? So we are going to prepare the sales ledger control account to identify the balance being required. Sales ledger control account, it starts with the balance BD on the debit side, and the balance BD is given here as 17,080. So I'm going to write 17,080 as my BD. Then looking at the transaction given, we are going to start with credit sales. And the credit sales, they appear on the debit side of the control account. So here I'm going to record credit sales of 64,000 on the debit side. I hope you are following class. Right. But cash sales of 8650 are not part of the control account. Remember, in the control account, cash sales are not recorded. So we are going to ignore 8650. Then we move on to the next statement. Receipts from debtors. Receipts from debtors are payments received from the customers. I hope you are following. They appear on the credit side of the control account. I hope you are following. So this one, return checks, the detail become bank, then you write 70 440, something like this. Then cash is also recorded. Why payments are recorded on the credit side? Because they are there to decrease the amount which was owed by the credit customers. Then I'm going to put my totals. 17,080 plus 64,000. You get 81,080. Then you say 81,080 minus 3280 minus 70,440. You get 7360. And this is your balance CD. Then you bring it down, 7360. So our answer is A. This is the balance. I hope you are following, class. But if you encounter a question which asks you to find the total sales revenue to be recorded in the income statement, you then add 64,000 with the cash sales. We move on to question number 6. It reads, on 31 December 2016, a cash book showed a debt balance of 800. Comparison with the bank statement revealed the following. Then you are given unpresented checks, uncredited deposits, which are also known as bank lodgements or undeposited checks, given bank charges. What is the balance on the bank statement? So you start by preparing what you call updated cash book. Updated cash book first. You prepare updated what? Cash book. I hope you are following. The updated cash book is going to start with the balance BD. According to the question, the balance BD in the cash book is a debt balance of 800. Sometimes it can be a credit balance, so you have to read carefully before you rush. I'm going to put balance BD on the debt side, then you write 800. Then of the information given, only bank charges are posted in the updated cash book. Unpresented checks, uncredited deposits are posted in the bank reconciliation statement. What are bank charges? Right? Bank charges are payments, so they are recorded on the credit side to represent cash outflow. So I'm going to write bank charges on the credit side, 2,000 what? 2,500. I hope you are following. Other items which are credited, we have standing order, direct debit, interest paid, dividends paid. Then on the
Debit side,
credit transfer, we also have interest earned, dividends are received, credit transfer, which is also known as bank giro. Right, so here I'm going to add 2.5 as the biggest total. 2.5 minus 800 at 1.7, which is representing your balance CD. Bring this down, you get 1,700, something like this. I hope you are following, class. Right. Now that we have prepared the updated cash book, we now want to prepare the bank reconciliation statement. Let me use this space here. Right, so in the bank reco, you are going to start with the balance as per cash book, which is the balance that has been obtained in the cash book working. So since it is on the credit side, let us give it the name overdraft as per cash book. Then I'm going to record 1.7 on the CR side. I hope you are following, class. Right, then after recording this, you record what you call unpresented checks. So unpresented checks, I'm going to record them on the debit side, on the debit column. Unpresented checks, 12,000. You write 12,000 here. I hope you are following. Then from unpresented, you record uncredited deposits. So uncredited deposits are now posted on the credit side to credit them. So the uncredited deposits are amounting to 2,800, something like this. I hope you are following. Then you skip one line both sides. You put the totals. So which side is bigger? 12,000. So you're going to write 12,000 in the totals. 12,000 in the totals. Then you say 12,000 minus 2.8 minus 1.7 to obtain the bank statement balance. 7.5. 7,500. So balance as per bank statement. But if it was on the debit side, it was going to be overdraft as a bank statement. So this one is a balance, which is a favorable figure. So your answer is 7.5 CR, since the difference is on the credit side. I hope you are following. So my answer is 7.5 CR. A is the answer. I hope you are following. Right, so in simple terms, you can notice that since the overdraft as per cashbook was posted on the credit side, we are lessing unpresented checks. Then we are adding uncredited deposits. I hope you are following. But if it was balanced as per cashbook, I was going to post it on the debit side. Then you add unpresented checks and you less uncredited deposits. I hope you are following, class. Right. Let us move on to question number 7. Discount allowed of 750 was credited to discount received account. What is the journal entry to correct the error? Right. So I'm going to open the two accounts. The discount allowed, I'm going to refer it as the DA account. And you open the discount received, which is the DR account. So remember, discount allowed is an expense. Expense, have got debit balance. Discount received is income. Income, yes, credit balance, right? So when attacking errors, you start by doing the error that was made. You do the error as what? As it is. I hope you are following. So what is the error here? Discount allowed of 750 was credited to discount received. So I'm going to credit 750 in the DR account, and this is denotes ERR, which is the error that was made, right? How do you correct this? You put 750 on the debit side of the DR account in order to cancel the 750 which was incorrectly credited. Then you record 750 in the correct account, which is the discount allowed. But when recording it, you debit, since the discount allowed is an expense. I hope you are following. So the correction is done by debiting DA and debiting DR, meaning suspense account is going to be credited by 1,500. So here's the journal entry, meaning to say our answer is C. C is the answer. Reads, which of the following is a personal account? So the answer is drawings. Remember, according to business entity concept, if the owner of the business, right, withdrew cash or goods for private use, we create a drawings account. So drawings account is a personal account which is representing the owner of the business. Machinery account is a real account. All assets, they form part of real accounts, whereas purchases and sales, they fall under nominal accounts. So your answer is A. I hope you are following. Purchases was going to be a personal account if it was purchases ledger. Same applies. Sales was going to become the answer if it was sales ledger. I hope you are following. We move on to question number 9. A company sells 4 different types of products, W, X, Y, and Z. The cost and the net realizable value of its inventory at 31 December 2017 are as follows. So remember, according to International Accounting Standard number 2, the basis of stock valuation is stock is valued at cost or net realizable value, whichever is lower. So if we look at the first row, W, the lowest amount is 32. We are going to choose or value W at 32,000. Then if we compare X, right, there is 36 costs and 34 NRV. The lower is 34, which is the NRV. We move on to Y, 52 and 48. The lower amount is 48 here. Then 26 and 32, the lower amount is 26. So I'm going to add all the figures in the green circles, 140,000. So your answer is A on question number 9. Then we move on to question number 10. Mark does not keep proper books of accounts. He provide the following details for the year ended 30 June 2017. What is the profit and loss for the year ended 30 June 2017? So we use the formula, the Coda formula. I refer to it as the Coda formula. It helps you to calculate the net profit or loss required. C stands for closing capital. O stands for opening capital. D stands for drawings, and A represents the additional capital. So closing capital is the capital at the end of the year, and this capital is given as capital at 30 June 2017. We have 75,000. So on C, I'm going to put 75,000 minus opening capital is the one for 1 July 2016, and this is 40,000. You write 40,000 here. Then D, we are going to add. D stands for drawings. Drawings for the year are given as 10,000. So I'm going to add 10,000. Then you subtract what you call additional capital. Additional capital comes when the owner of the business gives either a motor vehicle or cash into the business from his private resources. There is line number 3. Personal computers, meaning the computers were owned by Mark, brought into the business, injected into the business, they represent additional capital. So I'm going to less 20,000. So if we punch this in our calculator, 75,000 minus 40,000 plus 10,000 minus 20,000, you get 25,000. Since the 25,000 is positive, it denotes 25,000 profit. If it was negative, it was going to be loss. So my answer is B, 25,000 profit. Let us move on to question number 11. Given a company's year end is 31 December 2017. The following information relates to dividends paid and proposed. How much should be included as dividends in the statement of changes in equity for the year ended 31 December 2017? Right. We have what we call proposed dividends. Proposed dividends are dividends that are declared but yet to be paid. I hope you are following. So in statement of changes in equity, we are going to record dividends that are paid. I hope you are following. So this 35,000 was proposed dividends in 2016, but it was paid in 2017. The fact that it was paid, it is recorded in the statement of changes in equity. Then interim dividends are dividends which are paid during the year. So there is confirmation of payment here. It is recorded. But proposed dividends for 2017 are going to be paid in 2018. So they are subject to change. I hope you are following. So since they are subject to change, we are going to disclose them as a note, but we don't record them in the statement of changes in equity. So I'm going to add 35 plus 25, you get 60,000. Your answer is B. I hope you are following. We move on to question number 12. It reads, a company transfers goods from the factory to warehouse at a markup of 25%. The following information is provided. I hope you are following. What will be the adjustment to the provision for unrealized profit? I hope you are following. Right, so you are saying current minus previous. You are comparing the current unrealized profit with the previous unrealized profit to see whether there is increase or decrease. So the current is going to be obtained by multiplying the inventory as at 31 December with margin. You multiply with margin to identify the profit element. So we are given markup of 25%. You need to convert this markup to become margin because it is the margin which determines the profit element. So the markup of 25% means 1/4. To convert markup to margin, you add the numerator on the denominator. So you get 1/4 plus 1, which is good as 1/5. So I'm going to multiply 180,000 with 1/5 to get the unrealized profit at the year end. So 180,000, right, times 1/5, you get 36,000. And 36,000 denotes the current figure. So I'm going to write 36,000 on the current. Then you less with the previous, which is 51,000. I hope you are following. So 36,000 minus 51,000, you get negative 15,000. It means 15,000 decrease. Therefore, your answer is C. Let's move on to question number 13. Investing activities. Remember, investing activities is a subheading of cash flow statements. And under investing activities, we record acquisition and disposals of assets. I hope you are following. We also record dividends received and interest received. Right. Cash in hand and bank deposits. This is wrong. We do not record cash in hand. Receipts from the issue of shares and payments on redemption. This is recorded under financing activities. Acquisition and disposal of non-current assets. This is correct. The main revenue generating activities of a company. This is recorded under operating activities. So your answer is going to be what? To be C. Let us move on to question number 14. Which method of investment appraisal uses profits? Accounting rate of return is the one which uses profits. Internal rate of return, net present value, payback period, they use the cash flows. But it is only accounting rate of return which uses profits. Let us move on to question number 15. A project which is expected to run for 4 years is the following. Then we are given the annual average profits of 16,000, scrap value and the likes. What is the accounting rate of return? Right, so accounting rate of return is equals to average profit over average capital. So the average capital is calculated by adding the initial outlay with scrap value, then you divide by 2. You can make reference of June 2019 Zimsec marking guide. It came the question of investment appraisal, and the average capital was calculated using the formula initial outlay plus the scrap value divided by 2. So in this question, you can notice that the initial outlay is 75,000. The scrap value is 25,000. Adding the 2 and divided by 2, you get 50,000 as your denominator. So 16,000 divided by 50,000 times 100, it gives you 32%, making C as our answer. Right, we are now on question number 16. It reads, the table shows the total cost at different levels. Then you are given production in units as well as the total costs for the respective output. How much are total costs for the period? Right, so the first thing is to apply what you call the high-low method. According to the high-low method, you will be calculating variable cost per unit using the formula highest cost, which I'm going to denote as HC, minus lowest cost, which is the LC, divided by highest output, which is HO, minus lowest output, which is LO. If you divide, you will be able to calculate the variable cost per unit. I hope you are following, class. So what is HC? HC is the highest cost between the given costs. We have 300,000, we have 350, so the highest cost is 350. So I'm going to write 350 to represent HC. Then you less it with the 300,000, which is the LC. I hope you are following, class. Divide this with the highest output minus lowest output. The highest output is 25,000 units. The lowest output is 20,000 units. So you are saying 25,000 minus 20,000. 350 minus 300, it gives you 50,000. So you write 50,000. Then 25,000 minus 20,000, you get 5,000. So you are saying 50,000 divided by 5,000. You get 10. This is $10 per unit. So $10 per unit is denoting the variable cost per unit, right? So to then calculate the fixed cost, you are saying total cost is made up of fixed costs plus variable costs. I hope you are following. So you choose either the lowest combination, whereby you choose 20,300, or you can choose the highest combination. Let us choose the lowest combination. I'm going to put 300,000 on TC. Let fixed cost be represented by X. Remember, fixed cost is the unknown. Then the VC is going to be calculated by using the $10 per unit calculated using high-low. Then multiply this $10 with the corresponding output of 300,000, which is 20,000. So I'm going to multiply this by 20,000. I hope you are following. So if you put 350,000 on TC, it means on VC you multiply 10 with the 25,000, you still get the same answer of fixed costs. I hope you are following. So you are saying 300,000, which is the TC, 300,000, which is the TC, right? Minus 10 times the 20,000 is 200,000. So you are lessing 200,000 to make X the subject of what? Of the formula. So 300,000 minus 200,000, you get 100,000, representing your fixed costs. So my answer is A. This is high-low method. Right, we move on to question number 17. The management of a company wants to buy a machine. The following information is provided. 900,000, the one that you are seeing in brackets, it denotes what you call the initial outlay or the cost of the project, which is paid in year 0. I hope you are following. What is the payback period for the machine? Payback refers to the number of years required to recoup the initial outlay. So, what is the period required to bring back the 900,000, right? That was paid in year 0. So we are simply saying at the end of year 1, we are going to have 250,000. Then at the end of year 2, you are saying 250,000 plus 300,000 of year 2, you accumulate 550. So at the end of year 2 period, we'll be having 550 of the 900. 900. We need 350 for 550 to become 900. So you write 350,000. Then divide this 350 with the year 3 inflow of 400,000. So you divide it with 400,000. 0.875. So we have 2 complete years to be added with 0.875. You get 2.875 years. So the closest is C, 2.90. So this is your answer, 2.90. Right, you are now moving on to question number 18. It reads, which of the following standards may cause managers to perform less rather than more efficiently? Right, so this question was extracted from Blake Randall, page 302. It reads, I do standards are standards that can only be met under I do conditions. Since the conditions under which the business work are very rarely I do, these standards are unrealistic and are never likely to be attained. As a result, they may actually demotivate managers and cause them to perform less rather than more efficiently. I do standards should not be used. So the last sentence or the last 3 sentences is exactly similar to what question number 18 is saying. Therefore, our answer is going to be D on question number 18. Right, we are now moving on to question number 19. It reads, income gearing equals to interest divided by. So what I want you to notice is income gearing is the reciprocal of interest cover. Remember, we have what to call interest cover. Interest cover is equals to operating profit divided by interest. You don't multiply by 100 since it is expressed as number of times. Right, so income gearing, if you are asked to calculate income gearing, it is the reciprocal of interest cover, meaning you now have interest as numerator, then operating profits as your denominator. But for income gearing, you multiply with what? With 100. So they are saying income gearing equals to interest divided by what? By operating profit. And what is operating profit? It's profit from operations. So your answer is C. We move on to question number 20. The details of direct labor costs are as follows. What is the labor rate variance? So labor rate is calculated by SR minus AR, but you have to multiply with the actual hours. I hope you are following. So what is SR? It is the standard rate per hour. So using the first row of standard cost per unit, we are given 2 hours at $10 per hour. So on SR, I'm going to put 10, which is the standard rate per hour. Then to calculate the actual rate, you divide the total labor costs incurred, or 52.8, with the 6.6 hours. So 52,800 divided by 6,000 divided by 6,600, you get 8. So I'm going to put 8 here. Then you multiply with the actual hours of 6.6. So 10 minus 8, you get 2. So it's 6.6 times 2. You get 13.2. So you can notice that the 13.2 is positive, meaning to say our variance is a favorable. So the answer is D, which is 13,200 favorable. We move on to question number 21. It reads, the accounting for recording partnership dissolution is, we use realization account, which is also known as the liquidation account or the dissolution account. Then let us proceed. Question number 22. What is the correct double entry to record a profit on revaluation of an asset for a partnership? Remember, if you open a revaluation account, if the credit side is greater than the debit side, it means we have profit. So the profit is shared to the partners in their odd ratios. But when transferring this to the capital account to complete the double entry, we credit profit on revaluation in the capital account. So it means A and B, the partners, the profit on revaluation is going to be credited. So it means profit on revaluation in the revaluation account is debited, but in the capital account is credited. So our answer is C, debit revaluation account and credit capital account. Which of the following investors is the last to benefit in a firm? Remember, ordinary shareholders are the owners of the business, and the owners of the business or the company, they bear the greatest risk. So answer is D. We pay ordinary shareholders last. Right, we are now on question number 24. It reads, AA Limited provides the following information about machinery department. What was the amount of over or under absorption of overheads? So to calculate over or under absorption of overheads, we make use of the formula OAR times actual activity. So the actual activity can be in form of units or it can be in form of hours, depending on the OAR that we have calculated. So if it is the machinery department, we are using machine hours. So in simple terms, we are saying OAR times actual machine hours. Then you deduct actual overheads incurred. So we are going to less this with actual overheads incurred. I hope you are following. So how do you calculate the OAR, the overhead absorption rate? OAR, or the overhead absorption rate, is calculated using budgeted information only. So it means you are saying budgeted overheads divided by budgeted machine hours. I hope you are following. The budgeted overheads are given in the first line as 200,000. So you are saying 200,000 is your budgeted overheads, right? Divide this with the budgeted machine hours, which are in line 2 of 20,000. You get $10, and this $10 is for per machine hour. I hope you are following class. So I'm going to insert this I'm going to insert this $10, right, on the OAR. You get $10. Then multiply this with the actual machine hours. The actual machine hours are 16,000. So you multiply with 16,000. Then less with actual overheads incurred. Actual overheads are given in the third line, 187,000. I hope you are following. So what do you get? 10 times 16,000. You get 160,000 first. And this 160,000 that you got denotes what you call the applied overheads or the absorbed overheads. Then less the absorbed with 187,000, you'll be able to tell whether it is under absorption or over absorption. If it is positive, it's over absorption, which is income. If it is negative, it's under absorption, which is a loss or expense. So 160 minus 187, you get negative 27,000. So since it is negative, you are saying 27,000 under absorbed. So your answer is D, 27,000 under absorbed. I hope you are following class. Let us move on to question number 25. Question number 25 is in line with the redemption of shares. It reads, a company redeems 100,000 12% preference shares of $1 each at a premium of 25 cents per share. The shares were originally issued at a premium of 10 cents per share. The redemption was financed by a new issue of ordinary shares at par. It means there was no premium on the new issue. How much should be debited in the share premium account? So in the share premium account, we only debit the amount which is equivalent to the premium that was obtained on the original issue. Since there is no premium on the new issue of shares, so you simply multiply this 10 cents, the premium that was obtained originally, with the number of preference shares redeemed of 100,000. So 10% of 100,000, you get 10,000. So 10,000 is the only amount that is going to be debited in the share premium to finance premium on redemption. Our answer is A. I hope you are following. We move on to question number 26. Which of the following is an adjusting event? Remember, an adjusting event is a post-balance sheet event, right? Which occur before the balance sheet date. I hope you are following. It's something which can be adjusted even after the balance sheet has been prepared. Why? Because there is evidence of an event which occurred before the balance sheet date. So here, our answer is B, which is the insolvency of a major debtor. I want you to notice something. Let's say this is the timeline, and this is 31 December 2022, something like this. We have a customer by the name Susan, right? Susan bought goods on credit, maybe for 200. I hope you are following. But after preparing the balance sheet, we heard that Susan maybe ran away, or Susan disappeared. But she ran away. And there is evidence that Susan is no longer coming back. It means we need to write off Susan as a bad debt. So the debtors as at 31 December 2022, if the amount of debtors is 10,000, it means on the 10,000, we need to adjust this 10,000 by removing 200 from the 10,000 to get 9,800. I hope you are following. Right. What is the reason for adjusting insolvency of a major debtor? It is an adjusting event. Why? Because it occurred before the balance sheet date. Susan bought the goods before the balance sheet date. And we realized after preparing the balance sheet that Susan is now a bad debt. So we have to adjust. Why? Because there is enough evidence of an event which occurred before 31 December, which was this transaction. But loss of inventory by fire or purchase of assets by firm, if we buy, let's say this is now 2023, let's say this is 10 January, and a catastrophe occurred, our inventory was damaged by fire. The event occurred after the balance sheet date, therefore we do not adjust it. I hope you are following. But this one is being adjusted. Why? Because we are realizing after preparing the balance sheet that Susan, who bought before the balance sheet date, is now insolvent. So we have to adjust. But anything which occurs after the balance sheet date is a non-adjusting event. So non-adjusting events are not adjusted, are not accrued in the financial statements, but they are disclosed as a note. Then adjusting events, they are accrued or they are adjusted. Then as for proposed dividends, we do not record, we do not adjust it. Why? Because it is subject to change. The directors may propose to pay ordinary shares a dividend of 50,000, but it may change. You can see you may have a situation whereby next year they are now paid 60,000 or even less than 50,000. So we are not allowed to treat dividends proposed as a liability since they are subject to change. So your answer is B. I hope you are following. Right, we are now on question number 27. It reads, a company acquired a partnership at the following valuations, right? The purchase price was settled by an issue of ordinary shares of $1 each at a premium of 25 cents per share. How many shares were issued? So what you need to do is you start by calculating the purchase price first, or the purchase consideration. We know that the formula is purchased goodwill is equals to purchase price less net identifiable assets are taken over. So I'm going to put 45,000 on the goodwill. Then let the purchase price be X minus net identifiable assets of 175,000. Moving 175,000 to the left, you get 45,000 plus 175,000. So as to make X the subject. 45 plus 175, you get 220. 220,000. So 220,000 is the purchase consideration. Right, so if I prepare a purchase consideration summary, like the one that you prepare on sale of partnership to a limited company, we are going to have ordinary share per value as well as the share premium, right? So they are saying the purchase price was settled by an issue of ordinary shares of $1 each at a premium of 25 cents per share. It means the total price is $25. I hope you are following. So if I divide 220 by the total price of $25, you'll be able to identify the ordinary shares. I hope you are following. So 220,000 divided by $25, you get 176. So it means 176,000 is representing the ordinary share per value. Then less this with the 220,000, you get a premium of 44,000. I hope you are following. So you can test this. If you multiply 176 with the $25, you'll be able to get the total price. So 176 times $25, you get 220. I hope you are following. So how many shares were issued? Since the ordinary shares is a par value of $1, it means the number of shares are 176. Your answer is B. I hope you are following. We move on to question number 28. Which of the following is a capital expenditure? Carriage on purchases? No. This is a revenue expenditure. License fees? No. It is a revenue. Why? Because license is paid at a regular time interval. It can be paid quarterly, so it becomes a day-to-day thing. So it's a revenue. New tire for a motor vehicle? No. Then registration fee for a new vehicle? Yes. So the money that you register, the money that you pay to register a new motor vehicle is treated as capital expenditure. But the license fees, which comes there after registering, they fall under revenue expenditure. So your answer is D. I hope you are following. Move on to question number 29. It reads, An extraction from income statement shows the following. Then you are given inventory turnover in days. So this is very, very important. Remember, from the O level, even from the A level, you know that inventory turnover is equals to cost of sales over average stock. So cost of sales over average stock, it gives you inventory turnover as a number of times and not days. I hope you are following. So to find inventory turnover in days, you find the reciprocal of the normal formula that you are used to. It means average stock is now your numerator and the cost of sales is now your denominator. Then you multiply with 365 days in a year. You get inventory turnover as number of days. I hope you are following. Inventory turnover as number of times is cost of sales over average stock, right? But if you want to find inventory turnover as number of days, you say average stock over cost of sales times 365. So average stock is you add opening stock with closing stock. So since the opening stock is not known, you are saying let the opening stock be what? Be X. Add X with the closing stock, which is given as 18,000. Then you divide this by 2, you get what you call average stock. I hope you are following. Divide everything with the cost of goods sold, which are the cost of sales, given as 92,000, something like this. Then you multiply with 365 days in a year. So they are saying you get 25. So we want to solve this equation to find X. Let me start by cross multiplying both sides with 292,000. So 25 times 292,000, you get 7,300,000. So I'm going to say X plus 18,000 over 2 times 365 is equals to 7.3 million. 7.3 million. Then divide 7.3 million with the 365. You get 20,000. So you are saying X plus 18,000 all over to 2 is equals to 20,000. I hope you are following. Multiply both sides with the 2, you get X plus 18,000 is equals to 40,000. Then make X the subject by moving 18 to the right. You get 40 minus 18. It means X is equals to 22,000, representing your opening stock. So my answer is C. I hope you are following, class. Let us move on to question number 30. The following information is extracted from the financial statements of a business. What is the dividend cover? So dividend cover is calculated using the formula earnings per share divided by dividend per share, or you can say total earnings divided by total ordinary dividends. I hope you are following, class. Paid. Right. So what are earnings? Earnings, they refer to profit which is attributable to ordinary shareholders. Earnings, to calculate earnings, you start by taking the operating profit, then you remove 3 items from the operating profit. You remove interest, you remove tax, you remove the preference dividends. So if you remove interest, taxation, and the preference dividends from the operating profit, you'll be able to get the earnings, which are profit attributable to ordinary shareholders. So the profit from operations we are given is 280,000. I'm going to write 280,000 on OP. Then interest charges, it's 94,000. Do we have taxation? We don't have. So minus 0, we don't have taxation. But we are going to less the preference dividends of 66,000. Yeah, something like this. So 280 minus 94 minus 66, you get 120. So 120,000 denotes what we call the earnings. So I'm going to say 120,000 divided by the ordinary dividends of 50,000. You'll be able to get your dividend cover. So I'm going to divide 120,000 divided by 50,000. You get 2,4. So your answer is B, 2,4 times. Stay tuned as we move on to question number 31. Right, which of the following indicates the level of investors' confidence? Your answer is price earnings ratio, what you call the PER. I hope you are following. Right. We move on to question number 32. Which of the following is a cash and cash equivalence? Remember, cash and cash equivalence can be current asset or it can be current liability. If we have a favorable amount in the bank balance, it is current asset. But if it is unfavorable, it is showed under current liabilities. So it means B is your answer, bank overdraft. We move on to question number 33. Which of the following falls under an investing activity? Under investing activity, remember we showed disposal of assets, acquisition of assets, interest received, and dividend received. So my answer is A, which is interest received. I hope you are following. Then we move on to question number 34. The extract from statement of changes in equity for the year ended 31 December 2017 is given. Then we are given this table. What is the net cash flow from financing activity for the year ended 31 December 2017? So remember, bonus issue is going to be ignored. Why? Because there is no cash movement on bonus issue. Revaluation of property is also going to be ignored. Why? Revaluation reserve is not a cash item. I hope you are following. So I'm going to add the par value of rights issue together with the premium of rights issue, which involves cash movement. 72 plus 18, you get 90. So my answer is C. We are now moving on to question number 35. It reads, a company produces a single product that uses 8 kgs of raw materials per unit. The budgeted information for the next month is as follows. Then you are given sales in units, closing inventory of finished goods, and opening inventory of finished goods, as well as inventories for raw materials. What is the budgeted purchases of raw materials? So to attack this question, you start by preparing the production budget. You start by preparing the production budget first. I hope you are following. You start by the production budget. So on the production budget, you start with opening inventory of finished goods. The opening inventory of finished goods, and it is given as 4,000 units. So I'm going to write 4,000 here, something like this. Then you add production, where production is referring to the units produced during the period. So the production is unknown, meaning to say the production is going to come as a balancing figure. Then you less sales. Deduct sales here. Sales are given as 19,000. So I'm going to I'm going to less 19,000. I hope you are following class. To get what you call the closing inventory, which is given as 3,000. Something like this. So let us apply the backward calculation. 19 plus 3, you get 22,000. Yeah. Then 22 minus 4, it gives you 18,000. Something like this. I hope you are following. So 18,000 denotes the balancing figure showing the units that were produced. I hope you are following. So after the production budget, you then move to the raw materials budget. So according to the raw materials budget, you are going to start by the units needed to meet production. So the units needed to meet production is the 18,000 that we got from the production budget. You insert it here. Right, so since the raw materials purchases budget is calculated using the kgs, not in units, we are now converting the units needed to meet production by multiplying the units with the consumption per unit. Right, so the consumption per unit is given in the first sentence, 8 kgs of raw materials per unit. So we are going to multiply by 8 kgs to convert 18,000 into kilograms. So 18 times 8, you get 144,000. So you write 144,000 kgs, something like this. Right, then you add closing inventory of raw materials. The closing inventory of raw materials is given as 53,000. I'm going to add 53,000. You get 197,000. Something like this. Then you less the opening inventory. The opening inventory is 50,000. So I'm going to less 50,000 from 197. You get 147,000. So 147,000 denotes the raw material purchases. And our answer is C. This is how you go about it. I hope you are listening, class. We move on to question number 36. It reads, which of the following is not a benefit of preparing our budgets? Part A establishes a system of control. No, this is correct. It is a benefit. Remember, for budgets, control is simplified. Helps in coordinating business activities. It is a benefit. It fulfills legal obligations. No, it is not a mandatory for a business to prepare budgets. So if you don't prepare budgets, you are not violating a law. Motivate workers. If a bottom-up approach is used, this is good. It is a benefit. Remember, budgets, they motivate employees if there is worker participation and involvement in the process, which is being denoted as the bottom-up approach. So your answer is C, which is not the benefits. Let us proceed to question number 37. It reads, the standard cost of job A707 shows the following, right? Then we are given the cost elements as well as the margin. What is the price of the job? So you prepare a job quotation, right? So you find or you calculate the unit cost. You calculate the unit cost. So you are saying 2 kgs times $12.50. You get 25, which is the direct material per unit. Then you move on to direct labor. I hope you are following. 3.5 hours, which is 3.5, times 10. You get 35. 35 denotes direct labor per unit. Then we move on to production overheads. $8.50 per direct labor hour. So remember the hours we have 3.5 hours. So you are saying 8.5 times 3.5. You get 29.75. So you write 29.75. If you add 25 plus 35 plus 29.75, you get 89.75. So 89.75 is your production costs. I hope you are following. So to get the selling price, you need to add markup to the cost. You add markup to the costs. For you to get the selling price, you need to add a markup to the cost. So we are given margin of 20. So we need to convert 20% margin to a markup percentage. So 20% means 1/5. To convert margin to markup, you subtract. So if you less 1/5, you'll be left with 1/4. So we are going to multiply 89.75 by 1/4. I hope you are following. You get 22.4375. Then if you add with 89.75, it gives you 112.1875. So if we round it to 2 decimal places, you get 112.19, and your answer is D. I hope you are following, class. The diagram below shows the relationship between cost and output. What does the diagram indicate? Part A, fixed cost per unit. No, do not confuse fixed cost with fixed cost per unit. Fixed cost, they give you a horizontal line, but fixed cost per unit, they give you a curve like this. So this is fixed cost, right? And this is fixed cost per unit. Do not confuse the two. So A is wrong. It's not fixed cost per unit. Variable cost per unit, yes, it's correct. Remember, variable cost per unit are constant. Do not also confuse total. Do not confuse total variable cost with the variable cost per unit. Variable cost per unit are constant, but total variable costs, they give you this line. So my answer is B, variable cost per unit. We move on to question number 39. When a company is liquidated, what is the order of repayment of capital? Remember, ordinary shares, they bear the greatest risk, so they are paid last. So it means my answer is going to come between B and D. A and C are automatically eliminated. Why? Because ordinary shares are paid last, right? But the safest form is debentures, meaning to say debentures are going to be paid first, followed by preference shares, and lastly, ordinary shares. So my final answer becomes B. Then we move on to the last part of the question. Question number 40. Which of the following describes a flexible budget? Number 1, it considers variable costs of production only. Number 2, it reflects changes in fixed costs. Number 3, it shows changes in production costs only. Right, so part A is a partial truth, but the fact that there is only, it becomes wrong, because flexible budget does not consider variable production costs only. No, we also consider the sales revenue. I hope you are following. So your answer is D. It shows changes in sales revenue and costs at different levels of production. So your answer is D, which is the final result. I hope you enjoyed today's revision. Thank you for your time, guys. Till we meet again, shalom.